Going to move on to another type of divergence. This is a trend following divergence. Some of you may have heard of Larry Williams. Larry Williams credits my old boss at CTS, a young man who was young at the time, named Nick Van Nice, with identifying this type 2 stochastic divergence. At CTS, we call this a CTS trend confirmation signal. In this case, we have a stochastic swing low and a price low. Over here, we have a higher price low. However, we have a lower stochastic low. And we get the buy signal. So the bullish price pattern remains intact. However, we have a lower stochastic low. We get the buy signal when the faster K line crosses over the D line. And we would risk below this low. Let's see, this is a bearish example of the same thing. This one was kind of double stochastic divergence. We have a stochastic swing high and a price high, a higher stochastic high and a higher price high. Here we have a much higher stochastic high with a lower price high. As I said, this is the trend following signal, and it worked out quite well. A bullish example of the type 2 or bullish divergence or a trend confirmation buy signal. We have a low where the price pattern of higher highs and higher lows remains intact. Stochastic swing here and here. This one's much lower. It's an excellent type 2 setup. And let's see. Another one of the same. Price low, stochastic low, higher price low, lower stochastic low. As I said, we get the buy signal when the faster K line crosses above the D line on a closing basis. Once you're in, you place a stop below that low. More of the same, pretty much. Type 2 bearish divergence. With a stochastic swing high, another baby swing high, and a higher stochastic high here with a much lower price high than either of the previous price highs. Oh, overbought and oversold stochastics. I still talk to a gentleman who's been around this for a long time, and he gets very concerned when the stochastics become overbought. We've had quite a run in the currencies lately. This stochastic was overbought way down here, and it didn't go above 90 until here. The run was really just getting started. To be honest, one of the reasons I don't leave the stochastic on the chart anymore is because it can distract me. I can think, oh, this is overbought. But it had much further to go. And we can see that. One way to get around that is to move up to your weekly chart, look at it on a longer term time frame, and see that really it was just getting started. Even on the weekly chart, it was barely above mid-range when the daily was way overbought. And on the monthly was barely out of the oversold zone when the daily was overbought. So if you do get concerned, I suggest looking at a longer term time frame to settle things down. And of course, the flip side of the dollar index would be the euro, and it shows the same pattern. The top was right here. The stochastic was already in the oversold zone here before there was much of a move at all, already below 10 here, so very deeply oversold. But the market just continued to decline. And once again, the weekly would have helped with that. We looked at this significant divergence on the weekly, so that would have helped settle things down. We knew that we had a very nice divergence setup. And the weekly was just below mid-range when the daily was deeply oversold. And similar to the dollar, the monthly was barely out of the overbought zone when the daily was deeply oversold. So I suggest if you're concerned about the condition of the stochastic being overbought or oversold on the daily or on whatever chart you're looking at, every time frame you're looking at, look at a slightly longer term time frame and it might help out. Wide range reversals. I already mentioned that I love wide range reversals. When I was putting this together, I was astounded at how many amazing divergences there were on the weekly charts this year. I mentioned my friend who said he should only trade off the weeklies and golf. He could easily have done that looking at just these wide range reversals. Here we have one in gold. We can see what happens. Silver, similar pattern. If I were acting on the wide range reversals, I would certainly buy options. And this is an example of why you need to buy time. We'll be talking about my interest in buying time in a short while. But here you needed to buy time partly because it went sideways for several months. But it did finally work out very well.
What do you mean by buying time?
I'm sorry, I was going to get into that with options. I'm going to talk about how important it is to buy time. We'll go into that in a little bit.
Will you also cover resetting your stops?
Resetting stops? Oh, I usually use those swings. When we have a new swing, that's basically the step down program. So I would move the stops down along with the swings. As soon as you reaffirm, in this case, we had the entry signal here. We had to move down, we had to move up. Once we move down and reaffirm, once we get close below that low, I consider that reaffirming the decline. And once we reaffirm the decline, move the stop up on whatever chart you're on, whatever time frame you're playing. Another one in crude oil. This is continued. I guess we aren't much lower than that now. Natural gas. T-notes. This one, we'll have to see how this works out. It hasn't had as much time as the others. The S&P. Now, these were two that didn't work. I mentioned earlier that I had a great entry signal on the short side of the S&P. This one had me going long. I confess. These weekly reversals, by the way, are generally 2 times the average range, average true range. The average true range is either just the range of the bar, or if you have a gap, which we don't see as much anymore, you include the gap in the range. But we don't see that nearly as much anymore because the markets trade many of the markets trade 24 hours. So this was a wide range bullish reversal that might have been more impressive if we saw a little bit more of the earlier part of the chart. This one didn't work, and we didn't stay in too long because once it didn't get going, it went sideways so long that we jumped out. We saw that on oats earlier. We had a nice bullish reversal. When it didn't work after a time, when there was no follow through, we jumped out. But it also it took us away from being focused on the short side. I was definitely feeling like we were going to go up in here. We had another bullish reversal, and I once again thought that we were going to go up. Once we closed below it, of course, the reversal is void. The setup is void. And I also mentioned that Joe Ross saying that a buy signal that doesn't work becomes a sell signal. And that's very true in these setups. I consider that a very strong setup. When it didn't work, it was a sell signal.